Well, the inflation numbers have finally came in, and are they good or are they bad? We're gonna go over this situation and why I still think that there will be issues with the housing market, and we're gonna dive deep into that. My name is Orlando. Welcome to the channel, guys. Let's jump right into this because this is some good information for you to have if you are trying to get into this housing market. Let's see what my subscribers, my community thought when I did a poll of what the numbers would look like when the Fed released the CPI report. So I said the day before, I think inflation numbers coming out tomorrow will be above 8%. What do you think it will be? So the options were above 9%, 41% said that, between 8 and 9, 45% said that, and below 9% said that. And then I do not care, 5% of you guys said you don't really care about what the inflation numbers come out to be. So when the CPI report came out, what was the magic number? Well, the magic number was 8.5%. It was exactly where I thought it was going to be. I thought it was going to be over 8%, and it came in over 8%. So, you know, that is what it is. Hey, and most of you guys were right too, because you thought it was going to be in between 8 and 9%, and it fell right smack dab in the middle. So kudos to most of you guys who predicted that that was going to be the case. Inflation moderates in July as CPI rises at less than expected, 8.5%. Inflation eased slightly last month, but held nearly its highest level in 4 decades, even as gas prices fell and supply chains improved. The CPI report reflected a year-over-year increase of 8.5% in July, down from its prior month's 40-year high of 9.1. Now, here is the thing, guys. Here is my opinion about this. In my previous videos, I said even if inflation does go down, what does that prove? Because if inflation isn't knocked all the way down to 3, 4, it got cut in half or something like that, if that does not happen, that will not stop the Fed from raising rates, guys. That is what we care about, because these videos are about how inflation will affect the housing market. The Fed, guys, I'm not trying to be the bearer of bad news, but the Fed is going to continue to raise rates. They will continue to push and push and push. They want to slow down demand. They want to get houses down. They want houses to be affordable. The government does not want ridiculously overpriced homes. I know what you guys are thinking. You guys think, oh man, they want houses to be worth 10 times as much as they are now. No, they don't. Let me tell you what industries don't. Mortgage industry, banks. Nobody wants that. Everybody wants to give loans to people who can afford homes, and financing of mortgages, financing of homes, of property, real estate. That is a big sector of the economy, guys.
I don't think you have the facilities for that, big man.
That is a big sector. Not to only say that, but the third-party implications of that. Appliances for homes, flooring, all that stuff. All of those things are dependent upon home ownership. So making homes affordable is a big deal, guys. Because if people stop buying homes and they're not affordable, that is going to be really, really, really bad for the economy, guys. Really bad. Hence the reason why the Fed is continuing to raise rates. But before we jump into that, guys, 82% of you guys watching this video right now aren't subscribed to the channel. Please, please hit that subscribe button. It really does help out my channel and for more people to see this content. Now, let's take a look at this chart here. We could see that it was going up, down, and then obviously it went up, and we see it's right now currently at 8.5. The core CPI, which includes volatility of food and energy components of the report, remain firm, climbing at an annual 5.9 in line with June figures. A downward trend in gasoline prices over more than 50 consecutive days provided some relief to U.S. consumers last month after record energy costs pushed inflation to its highest point in June. The gasoline index fell 7.7% in July. Now, that is one of the biggest components of this report, is energy. And since gas prices came down, then the inflation rate came down with it. As we all know, we all get gas at the gas pump for our cars and whatnot, and we've seen prices drop. You went to your gas tank and saw it go down to $4 or whatever from $5 and $6 in some areas. So we have seen those prices come down, and with those prices softening, inflation has went down a little bit too.
We're slowing down.
But remember, guys, it didn't even go down a full percent. It went down 0.6%. This isn't some magical turnaround of inflation. It's not. It's still high. And I think that's what a lot of people don't understand, is that the inflation rate is still high. Is it good that it's going down? Yeah, of course. It's great. But it's going down like by this much. So we still have to fight this recession that is going to come, right? We have to deal with these rates that are going to continue to increase. But hey, look, you don't even have to take my word for it. Let's see what's being said when it comes to the Fed raising rates. Are they going to continue to raise rates, or is everything looking great? Just let everything float. Fed will absolutely raise rates in September with the focus of lowering inflation. That's in one outlet. Then we have Evans says Fed will likely raise rates into next year to curb inflation. Then we have Bloomberg, who says Fed rate hike forecast raised at JP Morgan Evercore on blowout jobs report. See, guys, listen, here is the thing. Just because inflation is coming down, right, does not mean that the Fed will stop raising rates. They will continue to raise rates because they are seeing a result. So think about this. You're doing something. Your whole objective is to curb inflation. That's your whole objective. That's what the Fed wants to do. And with the rate increases, they are now seeing that inflation is coming down. Do you think they're going to stop raising interest rates? Nope. They're going to continue raising interest rates. Will it be 50 basis points, 75 basis points, or 100 basis points? We do not know, but I can promise you this: they will continue to raise rates, guys. So don't think to yourself, oh man, prices aren't gonna come down. Houses are gonna be unaffordable forever. Don't think that. Don't think that. Rate increases will drive down the prices of homes. And here is another example that I'm going to show you guys that shows you, hey, look, things are going in the right direction. We have home inventories soars at record rates with U.S. buyers pulling back. The slowdown in demand means more properties are being left on the market, and that should give buyers some negotiating power. Now, here is a huge thing, guys. Rates continue to increase, so the demand comes down. That means that prices currently right now are too high. So with that being said, homeowners, and I know you guys have seen it, price reduction, price reduction, price reduction. They're everywhere. Sellers are bringing down the prices, and a lot of sellers are jumping into the market right now because they go,
man, I don't know when I'm going to get a better price. Based on the trend that is going on right now, my house won't be as valuable as it is today. Tomorrow, it's probably gonna go down in price, or I'm gonna have to bring it down in price.
Because a lot of sellers are seeing a trend of yesterday prices, do I gotta say it, are not today's prices. And they are seeing that as plain as day. 6 months ago, their neighbor sold a house for $485,000. Today, your house is gonna be sold for $405,000. Now, if you don't believe me in that, go back and look at my last video where I talk about how sellers are feeling scared right now. The supply of homes for sale across the U.S. grew at a record rate last month, another sign that higher mortgage costs are cooling down the housing market. The number of active listings jumped 31% from a year earlier. 31%, guys. Look, the numbers don't lie. A record high increase for a third straight month, according to a report Tuesday by Realtor. If you look at this chart, look, it's underneath, and then look what happens in April all the way up into July. It's shooting up. I don't want to say shooting up to the moon, you know, that's a crypto term. And by the way, I don't know if you guys have been following this metaverse real estate on another tangent. It's not looking too good. Prices are dropping by 85%. Woo, man. Hopefully you guys did not jump into the metaverse buying land game. You know, I'm sorry. I did a video on that trying to let people know that, you know, I get it. It's an early adopter metaverse thing and you're spending your money on virtual land and you thought that it was going to go up like an NFT, but it just didn't. Look at these numbers, guys. I'm gonna put a chart here. They're just going down. But that's beyond the point. This video isn't about metaverse real estate. I just wanted to show you, you know, how bubbles explode and and get popped. And you know, the housing market is kind of in that same scenario. Do I think it's gonna drop 85%? No, it's not going to drop 85% like that did. But the point is that inventory is continuing to go up, which is a good sign for you. People who are looking for a house, you will see houses come back down to reality. But once again, guys, I do want you guys to remember that just because there is a price cut does not mean that it still isn't overpriced. It's just like buying a pair of jeans. If you see that it's giving you 50% off, I can almost promise you the cost of making those jeans, even though they're giving you 50% off, they're making 150% off the cost. Now, it's not going to be that ridiculous, but you get the point. Just because someone gives you $20,000, $30,000 off, if they still are overpricing it by $100,000, the property will still be $80,000 to $70,000 overpriced, and they're going to make a good chunk of money. So please look out for that and realize the power you have with negotiating. The demand isn't high, so you can go in and ask for a lower price. You have power, guys. No more. Please, no more sight unseen, no doing inspections and all that other stuff. No. We're beyond that. So at the very end, what am I saying? I'm saying that get ready, buckle up. Prices will still go down, guys. Even though inflation is coming down, which should be expected with more and more rate increases. 2 more rate increases coming up, guys. What will that do to the interest rates? We'll find out. So hopefully you got value out of this content. I'm gonna need you to watch this next video here. It will help you understand this crazy housing market, get into your first rental property. Also check in the description, guys. I have my membership program and I have some useful links on getting a free credit report. I'll see you in the next one. Thanks.